not that formal. All right, so now we're looking at the energy sector. Um, our our portfolio is calling for Williams Brothers, WMB. Taking a look at the sector, we see that Energy Transfer is the sector leading MVP. Um, and the performance is about the same as Williams Brothers as well. And then OKE, company that I've seen more than a few times looking through all of these different portfolios, and the performance is about the same as well. There's some others here that are in the same neighborhood, but I figure I'll just keep it to three here. So I just want to take a quick look at what these companies are. Now, I'm familiar with WMB, but I wanted to go back and take a look and see exactly what the difference is. And from what I can gather, they pretty much do a little bit of everything, transmission as well as actually going into the ground and getting material. Natural gas seems to be the bulk of it, but there looks like there's some liquid oil as well. And then um, I clicked the right one. Wait a minute. Okay, that's OKE. Yeah. Sorry, OKE. Looks like mostly natural gas, but they do some transmission as well. Energy transfer, definitely for sure, all transmission. So sort of a middleman situation, which is really good when the price of oil or natural gas jumps around a bit. They're not usually affected by it because their contracts are usually written pretty far out in time. Um, Okay, so taking a look at just the performance over a 5 year, we see ET is 13, 15 for 1 year, 15 year to date. Okay, E 23, 39, 28 year to date. And then Williams Brothers way up at 78, 5 year, 31, and 27 year to date. Um, right away, it appears that Williams Companies is the clear winner. Just looking at the charts, take a quick look at the numbers now. Um, and again, just not doing a full financial analysis, just looking quickly at the numbers. We do see it's been pretty flat for WMB over the last 3 years as far as revenue anyway. Net income, uh, same thing, pretty flat. I think, yeah, this is current to date, so it's not the full year, and so it looks like they're on track to meet or beat last year. Um, and we do see it has increased over the last 3 years. That's really good. Looking at OKE, um, same thing. Revenues sort of all over the place. It's like it's way up, and then came down, and now it's actually beating 23. So that can be a good thing. Let's look at net income. Um, yeah, really decent growth. I mean, it's currently sitting at 25 and looks like it's going to meet or beat last year as well. I would say that this one looks um, a bit more impressive than Williams. Look at Energy Transfer now. It's a company that I love, a company I worked for in the past. Um, 38, 67, 89, 78, and then 83. It looks like all of these guys kind of fell off in 2023. Take a look again at Williams and see what happened in 2023. Pretty flat. OKE fell and the energy transfer fell. So that's something to think about, right? OKE energy transfer fell in 2023. Williams pretty much stayed flat. So that gives me a bit of confidence in in their business model. All right, looking at net profit, um, sort of all over the place for ET. Looks like they're gonna meet or beat possibly the 2022 number. Of course, 2023 was a big fall off. So okay, and then so this one is Williams, and it looks very similar to what OKE is doing as far as gathering the gas, but it also looks like they do go out and transmit it as well. All right, so let's take a look at the numbers here because honestly, it's just not much to go on looking at the net profit and revenue, other than maybe Williams sort of kind of edging these guys out when it comes to revenue stability. All right, dividend way up for Energy Transfer. It's one of the reasons why it is a huge holding for a lot of retirees and also pension funds as well because of that huge dividend, 8%, which is more than double these other two. All right, taking a look now at the price to earnings, looks like Williams is a higher PE, which makes sense because of the stability in those numbers. Energy Transfer, a lower PE, which may be something of a dividend trap. I would have to go in a bit further and look and see what's going on there. The net profit, Williams has those guys beat out. Return on assets, OKE, Williams about the same. Williams has a lot more cash on hand, and I think that's important because um, with the exception of Energy Transfer, I mean these guys are pretty much in the same industry. So having a lot of that cash is really nice to see. Cash to debt, of course, because the cash is much higher there. Um, Bigger alpha on Energy Transfer makes a lot of sense. Up move goes to Williams. Down move goes to OKE. Much higher beta for OKE. Um, Williams, not so much, which is interesting because of that revenue stability. Don't expect that. All right, the return is about the same for these guys. Looks like Williams is a bit down. Remember, this is the previous 3 years, not including 2024. Volatility, I call it about the same. Williams seems a bit better. And then, of course, we have our management score, which is much higher for Williams. And then we see the um, the score for OKE and Williams is really about the same here. And I'm going to give a bit more credit to the management score here because we know previously that the management score plus dividend was the best performing portfolio until TRN was taken out of the portfolio. So I think that says something here. Um, right away, I could say that Williams seems like the better deal. It is what the portfolio is calling for. I do want to do just a not a deep dive, but just a little bit of research into Energy Transfer. Maybe go over the last earnings call just to see if there's something in there that is causing this lower PE. Because when you see a low PE like this, it can be either that it's a great buying opportunity, or it means that the stock is currently in trouble. And going back and looking at the numbers over the last couple of years here, we see that again it fell in 2023 as normal, but currently it looks like it's on track. Um, it's not gonna doesn't look like it's gonna beat the 22 numbers, but it's going to be a decent revenue looking back over the last couple of years. Not a not a horrible showing. And then looking again at the net income, again, I don't think it's going to meet or beat 2022, but it's not terrible, right? So I'm going to look and see what's going on because maybe there's something there that we need to stay away from. But again, just surface level stuff. Looks like Williams Companies is where we're going to go. It's a company I'm familiar with. Purchase price is $40, so we'll be able to get quite a few shares there. The dividend is not like crazy, but again, that's typically something that you see of a better performing company, a lower dividend rate. So, yep, I think that's it.